This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashurdis. Thanks for joining us at XM.com. Global markets buckled under the weight of the new shutdowns in Europe yesterday, with the newfound uncertainty around the U.S. election making matters worse. The straw that finally broke the camel's back was France and Germany announcing a new set of nationwide measures to battle the spread of the virus, which threatened to derail the fragile recovery and throw the Eurozone into a double-dip recession. U.S. equities fell a whopping 3.5% as investors trimmed their risk exposure, while defensive plays like the Japanese yen and the U.S. dollar shined bright. The new restrictions are not quite as strict as the lockdowns in March, so the hit to economic growth will likely be smaller, but that also means less fiscal assistance to cushion the blow this time. The atmosphere is calmer on Thursday, with futures pointing to a 1% higher open on Wall Street, but the FX market is saying this episode is not quite over as both the yen and the dollar continue to edge higher. Overall, it is difficult to envision any meaningful recovery for now, with next week's election casting a long shadow. Besides stocks, the main losers from yesterday's rout were the commodity-linked currencies. The loonie in particular suffered a triple whammy of risk aversion, sinking oil prices, and a cautious-sounding Bank of Canada. Gold prices fell victim to the turmoil as well. Bullion dropped below the $1,900 region, demonstrating once more that it is not a safe haven during this particular crisis, but rather a risky asset. Essentially, the US dollar is the new gold, as it is the reserve currency that has acted like a true defensive asset since March. The main event today will be the ECB meeting. The central bank is expected to hold off from introducing more stimulus, but in light of the new lockdowns and the growing risk of a double-dip recession, President Lagarde will likely prepare the ground for more action in December. This was today's Daily Market Comment. Thanks for joining us at XM.com.